The town is in a good financial position. There is some room for improvement with the structure of the general ledger and a few small accounting items. The last two items under non-current assets are your capital assets not being depreciated, and that had a balance of $13,390,000. And then right below that, you have your capital assets net of accumulated depreciation and amortization, and that had a balance of $88,681,000. So capital assets in total increased by about $9.9 million from the prior year. And the breakout of that is there was $16.3 million in new additions to your capital assets, but that was softened by depreciation expense of about $6.5 million, which there's a category called non-current liabilities. And the very first line item there is your compensated absences, and that had a balance of $2,057,000. You'll see the next one that has a number associated with it is your net OPEB liability. And that has a balance of $131,153,000. Essentially, this is a $9.3 million increase from the prior year. So this is which are actually produced to say the total OPEB liability, we're estimating it to be $141 million. But on the bottom half of that, you have your plan fiduciary net position. This is the town's OPEB trust fund. And you can see that that has a balance of $11 million. And then three numbers from the bottom, which is where I'd like to pay attention, is essentially your funding ratio. And that's at 7.8%. Next line item I want to talk to you about, which is your net pension liability. And that had a balance of $35,546,000. And the town makes up about 84% of the total liability. The additional pieces are the Housing Authority and the Electric Division. The liability did decrease by about $4.6 million. Is your long-term bonds and notes payable, which is that line item right below the net pension liability. That had a balance of $22,494,000. The town made principal payments of about $2.9 million on your outstanding debt, but then you also incurred new debt of about $2.8 million. Your unassigned fund balance is, in my opinion, one of the most important numbers in your financial statements. And that had a balance of $15,450,000. And total revenues had a favorable variance of $3.4 million. What this represents is the amount of revenues that came in greater than what the town anticipated during fiscal year 25. The total expenditures had a favorable variance of $1,867,000. What this represents is the amount of expenditures that came in less than what the town anticipated. It is $5,288,000. This can be thought of as what the town beat the budget by. However, the town utilized free cash during the fiscal year 2025 budgeting process, and you utilize about $4.8 million of free cash during the fiscal year process. But that's largely speaking why you see that decrease in your unassigned fund balance of $196,000. Last year, there were 6 recommendations in the management letter, and this year there are 4 recommendations. The town didn't fully implement the Governmental Accounting Standards Board Statement number 84 in the general ledger. And then the second piece of it is the town manually tracks some specific special revenue funds and some capital project fund, the year-end balance from year to year. And what we're recommending is that, again, adjusting the general ledger to allow the general ledger to calculate that for the town. There's a new component to it on page 2, and that is in relation to the school federal grant fund balances. So when we were doing our audit procedures, we noticed that there were some expenditures on some old federal grant funds whose period of performance appeared to us to have expired. The school department is requesting reimbursements for grants prior to incurring the related expenses. So what we're recommending is that the school department handle these grants on a reimbursement base and only request reimbursement after the corresponding expenses have been incurred. I'd like to thank Stacy, her team, and anybody who worked with us on the audit. The town was, largely speaking, very well prepared for us, and it is uncommon to have somebody who has little to no municipal experience come in and be successful in an audit. Kudos to her and her team for doing a fantastic job and making sure this audit went smoothly.